Ladies and gentlemen, welcome to the Midday Market Monitor. Camera was a little bit off. How you guys doing today? All right, we're going to be talking about the red markets that are ensuing. Nvidia down 5%. Not only are they the absolute winners of all of this CapEx spend, whenever you have a company that sells the most chips in the world at the highest market share, whenever Google and expected to be Microsoft and Amazon and Meta and all of these companies spend more in a year than what Wall Street was expecting, you would think that companies like Nvidia would prevail, that they would be the large winners, the ones where their free cash flow continues to climb up. But then you end up seeing stories that Nvidia is going to be helping pay with OpenAI's 10 gigawatt data center, $250 billion potentially worth of financing. Now, this story is actually quite old. We probably reported on this 2 months ago or something like this. But the market is taking it down once again because those were rumors, and this is more, very on point. SoftBank's data center with OpenAI in Ohio. That said, the spending for Nvidia is not done. They also announced a $500 billion build out with SK Group or SK Hynix telecom side of the business, in which they're actually setting up data centers. They'll be doing this alongside Nvidia, working with their HBM, SK Hynix HBM4. And so that was another, big build out for Nvidia, lots of spend there. On top of that, we also found out that just recently that Ilya Sutskever's Super Safe Intelligence, or SSI, he was recently on OpenAI, left that company, said that he didn't like what was going on there, and then obviously named his company Super Safe AI. So maybe a little bit of concerning things that were coming out of OpenAI to have him leave. He was one of the godfathers of artificial intelligence, and Ilya obviously has massive backing because a lot of where AI is today was off of it's a little bit of his brainchild, right? So his idea. Now, that being said, Ilya Sutskever's Super Safe AI ended up coming out with a backing by Nvidia. Now, at first, we didn't know what this pricing was. They came out and said that they wanted to 10x their compute in the next 12 months. So obviously a ton of spend. They're not just going to be using TPUs, they're going to be using Nvidia chips now. But more importantly, we found out, according to Bloomberg, how much Nvidia is actually giving SSI as an investment, the part of a strategic investment. Now, this falls into their private equity investments, not their public investments like what we've seen with CoreWeave, Nebius, Intel, and the list goes on and on. But in the private equity side, they've got investments in Anthropic and OpenAI, and now SSI of $5 billion. A major, major investment. This is on the line of how much that they put in to Intel, or 25% more than what they put into Nebius and CoreWeave put together. Actually, if you take the other rounds that they invested in CoreWeave, which was about another $1 billion, it's roughly about the same amount of money that they invested in Nebius and CoreWeave put together. Okay. So pretty wild. Lots of investment there from Nvidia. That, along with some potential souring macro. However, there were some signs that this might end up getting a little bit better. Trump potentially indicating that we might have a deal with Iran, that they're going to have a meeting, and that meeting will happen. We still obviously don't know, and this has been back and forth. So it's a little bit of, boy who cried wolf right now. The boy who cried deal. But that's bringing Nvidia down 5%. On top of that, Nvidia's market cap now is $4.7 trillion, $4.74 trillion. If we go over here to Apple, we're at $4.94 trillion. Okay. Apple is about to exceed a $5 trillion market cap, and is now back to the #1 spot of being the biggest company in the world. So who's going to be the first company? Well, actually, I think the first company to hit 5 trillion. No, that was Nvidia. They never hit 6 trillion. But I guess it wouldn't have been far at nearly $240. That's actually almost right there. So yeah, this is the current market right now. NASDAQ down 0.66%, S&P 500 down 0.35%. Let me go ahead and get through some other stories, but I want to keep an eye on this market really quickly because we're having some down candles or some red candles right now. I just want to make sure that we're not missing anything. Oh boy, oh boy, oh boy. China now accounts for 28% of global manufacturing, more than any other country or economic bloc. This percentage has more than tripled since 2004. We've got Navitas earnings tonight. Okay, I don't see anything just yet in terms of stories that might be taking down the market right now. Let's see. Dude, we have, by the way, a ton of huge, like very big CEOs coming on X now. So we just saw Bernard Arnault and Jensen Huang. These are both like centibillionaires that have recently joined X and talking directly with their audiences. What a wild time to be alive that you can just connect and essentially DM or comment underneath Jensen Huang's posts. Wild. Yeah, centibillionaires is nuts. Let's not forget that, last week we had a trillionaire on Earth. I saw some statistic that talked about the concentration of wealth at like the 4th decimal point. Like it was like the concentration of wealth for the 0.0001% of the world has never been higher. And not just in aggregate dollar amount, as the percentage of share of human wealth. Obviously, it's tied up in a lot of equities for these companies or for these individuals. Yeah. None of them are really flaunting hundreds of billions in cash. I actually am curious, who is the richest person on Earth cash-wise? That's kind of interesting. BM&R buying back stock? Yeah, I heard that. Like something like 6.1 million shares or something like that. OpenAI is a graveyard for a company. They took down Oracle. They'll take down Nvidia. That's been the case for a while. That sentiment on OpenAI has not been great. The company's ARR has continued to skyrocket, and they're starting to see the best progress that they've ever made in a very long time. There was a report that came out probably 2 months ago that talked about how OpenAI was missing their internal targets. Sam Altman has since come out and corrected that, saying that they are doing way better than they thought ever since the 5.6 Sol launch. I was going to say leak, and I'm like, it wasn't a leak. They did a whole presentation. And so I don't know. I think a lot of people point to it. It's definitely a sentiment graveyard, that's for sure. And it used to be that whenever a company partnered with OpenAI, that stock would go down. And then whenever a company partnered with Anthropic, that stock would go up. Super weird. But I think OpenAI is still doing okay. OpenAI is almost exclusively the only AI company that I use. And I've got subscriptions for a lot of them. But I just find myself using 5.6 Sol all the time. It's really, really good. They've got the best images, voice models. There's certain things, like if I'm looking for real news, or like if I wanted to see why is the market dropping right now, I wouldn't check ChatGPT, I'd check Grok. But yeah. What's happened to semis? Nothing seems to stop tanking them. Well, it's because the news I think that's coming out is going further and further into the overspend commentary and the more debt and financing commentary, which could, you can start to talk about default and stuff like this. Companies that are growing slow but are profitable and don't have debt, you don't discuss bankruptcy with those businesses. You discuss them with the businesses that are running too fast, that are taking on too much risk, and that if there's a slip up in their growth forecasts, that everything can come crumbling down. And we've seen that, right? Like the trajectory of where we thought OpenAI or Anthropic's ARR would go at some points have way exceeded expectations, and stocks run on that news. And then on other times, we ended up seeing ChatGPT go way slower than what we expected. But if that's slower than their internal projections, what they've actually signed commitments for based on a new launch, and the craziest part about the area that we're in today in artificial intelligence is this stuff spreads like wildfire. So if there is a new model, if there is a new story, or like, let's say Kimi K3, and Kimi K3 had capacity to take on every new customer that they possibly could, you might not see people re-up on OpenAI and instead use a lot of these new models, and that they could catch, or not even that they have to re-up on their subscriptions, but any new token amounts. Like if you're spending $2,000 a month there or $5,000 a month there, you might end up spending, $500, and then you end up spending a few thousand over at Kimi K3. And so, and Kimi K3, mind you, literally like came onto the scene, did the benchmarks almost same day, and then it was instantly, like same day, a viral sensation. So the pickup in the amount of subscriptions and the uptake of how fast people are willing to change their mind in this market for these types of products is extremely fast, especially whenever the products are cloud-based, right? Changing your entire enterprise over, or running these running these models locally, that's a different story. That stuff takes a little bit of time, takes a little bit of build out, but not necessarily the case whenever you're just using these APIs. It's pretty quick. Okay, that said, we need to talk about one, look at this. VCX. Who could have guessed, eh? Fundrise Innovation. Whenever this was skyrocketing, there were a ton of people in chat. Don't hide now. Okay? This was back in March. This company hit $575. And I don't know if, the YouTube audience and stuff like this could have rang the alarm bells harder. Me, Amit, Steve, everyone was like, dude, this valuation does not make sense. But now we're sitting here at $41. This thing has silently just crashed all the way down because the multiple that this thing had on, what was it? It's essentially it's MNAV, right? It's value versus its actual assets was terrible. SK Hynix is also down 9.6%. SanDisk almost down 12%. And Micron, let's see Micron here, also down 5.4%. Micron seeing some good news, but also, as you can see, a lot of the memory names are down. Why? Well, there might be a new memory stock that has been getting a lot of traction recently, and talks with Apple and these sort of things, but now it's actually a purchasable company in Chinese yuan that's up 465% today, CXMT. You guys probably have heard about this name. They produce consumer level memory, but wanting to break in pretty viciously into the data center side. They're talking about some pretty big advancements that they've made. And now that this company has gone public, we've gone from, I think it was founded in like 2017 or something, to being roughly about a $500 billion company today in US dollars, or 3.3 trillion in Chinese yuan. Wild, up 465%. Okay. This is why the memory names are down for the most part. Bad macro as well doesn't help. And then, a myriad of different stories, whether or not they're going to get a partnership with Apple and these sort of things. What's also funny, though, is look at the benefit to many of these software names. Wix is up 10%, Atlassian up 11%, HubSpot up 10.8%, Klaviyo, Workday, Shopify, C3 AI. Well, that one's a little bit whatever. Duolingo, Navan, ServiceNow up 8%, Zeta up 7.8%. Love to hear some more commentary there. Reddit up 7.7%, Figma. It is an IGV day. IGV is up 3.8%. Wild that these rotations continue to happen. A new model comes out, sinks all these companies. The new model is absorbed, right? It's no longer buy the rumor, sell the news. It's almost like once the news actually comes out, you can go ahead and buy software names again because they didn't completely destroy these businesses. And we play this over and over. New model's about to come out, software crashes. The model actually comes out. Okay, well, it doesn't replace it just yet, so we can run it back up. And then the new like the Fable 5.1s that are expected to come out and the ChatGPT 6s that are expected to come out this month, okay? And Gemini 4 and all these ones, we have to go through that test again. Does this replace Figma? Does this replace Atlassian? Does this replace all of these different practices or software companies that, have recently obviously made a ton of revenues going down to free cash flow because a lot of these companies are not spending like crazy. And so they actually have free cash flow. They don't have that CapEx spend. They've got high margins like software businesses should, and they're growing pretty quickly. You can look to what ServiceNow just ended up showing off, or Palantir, or some of these things. And what the bad software companies are going to say is that there's rotation away from spending on software, and it's going into the hardware products, and that is a sector-wide development. But then you look at Figma, and you look at Palantir, and you look at ServiceNow, and all the companies that continue to just blow away expectations, and you realize that there is a difference between execution and who's actually grabbing the customers with their products. Are you staying ahead of the curve? Are you working with artificial intelligence? You're not necessarily trying to say, no, don't use these products, but how can we help you use these products, make your business better? That's what's working for Palantir. That's what's working for ServiceNow and many of these other names here. Figma, for example. Yeah. Give it a rest, Tanner. AI is not replacing SaaS, bro. Not for at least. What words do you think are coming out of my mouth right now? All right. I'll let him scroll back and just listen to what I just said. Now, what's funny about AI is not replacing SaaS, that individual said 5 to 10 years. Go ahead and listen to, or let's go ahead and listen to what Elon Musk just said as a prediction for, 10 years out from now. Have a listen to this. Tell me if you've already seen this.
On how then you make money, because in the end, people are buying your shares because they expect you to make money. Do you sell
I'll
robots?
make another prediction. Money won't matter in 2036.
I'm not sure that the people who bought your shares think that money won't matter in 2036.
Well, what do you want money for? You want money for goods and services, right? You want money for obviously food, housing, transport, entertainment. Well, if that is so abundant that there's more, that the robots and AI are providing more goods and services than any human could possibly consume, what do you need money for in that case?
But you're on how then.
Okay. I like some of the Gaga songs. No, I like a lot of what Elon has to say, and I agree with him about a lot of things. There's no amount of AI or robotics that is going to give you beachfront property in California. You know, there are things of limited supply. Now, will universal basic income or universal high income or something like this make a lot of sense? Maybe. Maybe we'll have so much abundance of a lot of the things that he's talking about. But there is artwork. There's luxury goods. You can get t-shirts for very, very cheap, but people don't choose to buy those t-shirts. Not everyone. The people who can afford it buy fancier t-shirts with logos that were easy to embroider, but they were embroidered by the right person, by the right company. And we spend a lot on that. Money won't mean anything in 2036, I think, is a bad take. Now, some people said, I just saw this one comment, yeah, like Elon has predicted anything. I don't think that's fair. I mean, he has made, you could probably put it in the term of thousands of bets that have turned out right. And those were predictions that, you know, you could make cars that were really great using, you know, electric batteries or something like this. That's a massively wild statement to make if you were to look back 15 years ago and say, you know, by 2026, an electric car is going to be the best-selling car of all time. That's a wild, wild prediction. But it's turned out to be true. Now, some of his timelines are incorrect, and I'm sure he's made statements in the past talking about how all cars are going to be electric, and we've already passed that date. So, you know, will a job or something like this be necessary in the future? Maybe not. Will you be able to survive on much, much less? Maybe. I don't know. I think an unlimited amount of intelligence and labor and all of these things will make things pretty cheap. I think technology has been inherently deflationary. I think that that's going to help with artificial intelligence and robotics. I think that's going to be likely, you know, good for bringing costs down and making things more affordable. That just seems right in my head. But if you're a Tesla shareholder, you better hope that you're not wasting all of your money today for it to be worth nothing into the future. Like, come on. You know, or else spend it now and enjoy it and focus on the real currency, which might be like your health or something. Am I out of my gourd saying this? Also, who liked my Lady Gaga reference? I thought that was pretty good. I was pretty proud of that one. It's a deep cut. $500 shares on margin I'm going to hold forever. All right. That's your right. That's your right. I actually wanted to talk about SpaceX. I don't know if we're going to do that today or tomorrow. I like the Kanye accent that you did with it. I mean, it was perfect. Okay. Tanner, is your CoreWeave position fully built out? No, not if I had it my way. I would keep building it out, but I got no money. But I still am looking at stocks in case I stumble upon some money come payday, you know, these sort of things. Maybe I sell out of a position that's up or something like this, or get out of, you know, shift 4 or something like this that has been underperforming. I'm still looking for things to purchase. I've been looking at Tesla. Dude, this company is so far from a company that I want to purchase. In the same breath, I was looking at Tesla Model Ys over the weekend to purchase. And there can be amazing products and amazing vision and still be one of the grossest financial situations that you can have a look at right now. Tesla's financials look awful. Okay. Free cash flow. One of the things that I heard whenever I was talking with Sawyer Merritt, he said that the combination, I'm pretty sure it's Sawyer Merritt. Maybe it was someone else that said this, so maybe I shouldn't. Anyway, Sawyer is a super fan of Tesla. And one of the things that they were talking about with the merger of both SpaceX and Tesla was that SpaceX is going to be extremely capital intensive, and they're going to want to merge with Tesla because at least that company has some free cash flow. It's also capital intensive, but less capital intensive enough for them to still be positive on free cash flow. That's no longer the case. So now you're looking at Tesla and SpaceX merging together to be the ultimate, terrible bond rating. Like, what's the hope of bringing those two companies together right now? None of them have the financial situation to support either one of them. It's wild. Ain't no way my man's trying to buy Tesla. Well, I will own this company again. Okay? I will. Tesla was a huge part of my position a long time ago. I still think it's the best car on the road. You don't have to agree with that. It's my personal opinion. And I think that there will be a lot of products that Elon is going to sell that are going to be above and beyond what other companies can produce. That's just what his wild brain is able to do. And he's been doing that multiple times over and over and over. But he's honestly doing so much all at one time that, we're kind of waiting for any one of these sort of projects that he's working on to sort of get on the ground running and, start to spit out some real profits. So in this 10-year, 5-year gap, whatever it is, we're building out Optimus, we're building out lithium refineries, we're building out robo-taxis, and we're building out all of these things that are extremely expensive to produce. That's just hard. And sales are up. Services on Tesla is up. The gross margin on services is at an all-time high. Automotive deliveries hit a record. Automotive sales is doing pretty well, but the gross margin was like 16%. So we're still a long way from this company producing margins that would actually separate it financially from other auto manufacturers. That's pretty crazy. Money being useless ain't good for SoFi. Yeah. It's really the only thing that banks have going for it. But in the same breath, this is one of those things like putting all your money on if an apocalypse is not going to happen. Like, if it does happen, you're dead anyway. So who cares? If money is no good, then who cares about where SoFi is in the first place? Okay. Elon only has 19% voting rights at Tesla. Is that true? I thought he had like voter shares. Does he not have a better say at Tesla? I know that he has 19% of the ownership. Is it only 90% voting rights? Useless money equals CAD. All right, you got me. That's funny. I did hear that the Canadian dollar is currently at its highest short position. Like, people are betting against the Canadian dollar at the highest levels in history right now. Wild. But Kimball and his crew have a bunch. Yeah, maybe he has a better voting say than you would think. Oh my gosh, you can just look at Tesla's valuation right now and know that, the entire board is on his side. The PE is 284 times. That's because of Elon. If you vote him out or go against what he wants from this business, then all the fanboys and everything like this, if Elon leaves, is going to crash anyways. It's a death sentence if you go against Elon. So I'm not worried about his voting right. They're going to do exactly what he says in, forever. The CAD carry trade. Okay. All right. Quantum D-Wave is up 15.8%. What's going on with Quantum these days? Enigma says that it has put 100 AI-powered robots online for public browser control. It raised $71 million seed round led by Index Ventures and Ribbit Capital. The company is building robot intelligence models in its interfaces. And the interfaces people use to give them tasks. Anyone in the world can control them right now from a browser. Oh, fun. Okay, I get it. They're like arms. Robotic arms that can be controlled online. All right. D-Wave expanded their AT&T deal. Got you. It would suck for someone to create a false story that Elon left and everyone sold. There's been a couple of those things, like these fake stories that have just caused massive sell-offs in the stock markets. Usually the companies are quick to address them, but there's been ones on Nvidia as well, and they can have weird control over stocks. I think it was also Lucid, right? Lucid said that they were going bankrupt or something. Yeah, you can see right here. Lucid said that they were going bankrupt. The company then came out and said, we're doing no such thing, and it returned. But at some point, you could have bought this company. It went from essentially $5.50 down to $2.37. Fake story. How wild is that? We covered it live on the thing. Like, it was down for probably a few hours. It was definitely buyable. Now, I didn't buy any. I'm not wanting to hold Lucid, and I wasn't fast enough to get into it or anything, but still crazy. Okay. Wix is now up 11%. Where is the stock draft sitting on a day like today? I'm still in second, but I'm falling now. It's honestly Rubrik. Rubrik was up 26% for me, and now it's not. Now it's not. We're only up 6.7%. So we've dropped 20% on that name alone. Lumentum and Hood was green at one point. Now it's back to being in the red. ASML is another one that's falling behind. Visa has been a very consistent one, and so has Mercado Libre. And Palantir was one of our most read names in the draft. Now it's green. But, we're just seeing a little bit of that semi trade getting hurt. And then also the what was it? Rubrik, that was not looking great. Okay. The SpaceX short from Matt is almost up 40%. Literally one of the greatest plays. What an absolute genius. VG is up 19.8%. Nubank's up 13.8%. Duolingo up 4%. But he's got ASTS and Micron both down big in the 20+ percentages. See, this is the weird thing about the draft is you'd be so quick to change your actual portfolio if this was happening. But in the draft, you can't touch it, right? So you'd want to lock in profits on SpaceX or do some of these things. It's not happening until we have the rebalance, which is in August. Okay. Ironically, all the SaaS companies are green in the draft. Yeah, that should be good for Steve, I'm pretty sure. Steve had a lot of SaaS names. He's got CRM, Zeta. What else? Well, he also has Meta and Uber and Netflix. I guess those aren't SaaS, but they're like in the, sort of, I don't know, software or internet companies or network companies. Yeah, but not traditionally software as a service. Maybe Micron, but scares me more than SpaceX. Dude, I don't think that you get a build out in the range that you're seeing for 10 gigawatts for OpenAI and Ilya Sutskever's $5 billion announcement and the SK Telecom announcement and all of these things with memory going to do poorly. How does one happen without the other? Jack, yes, we do have a guest, I think at 3. All right. CRM is breaking out. CRM up 7.8%. It's actually wild. But if these companies are going to be around for a long time, like, you're going to be surprised at how oversold these are, because like I think Salesforce has a forward PE of like 13 or like 12 point something times. But I think the wild thing is, and what's so crazy about the market, 12.6 times is the forward PE on Salesforce right now before the up 8% move. I think the hard part about this market is that we've not even seen a model designed on Vera Rubin. Vera Rubins are going to be able to produce much, much greater models than what we've seen in the past. Both Sam Altman, many of the, biggest people in artificial intelligence, including Dario, have said that the more compute that you have, the smarter the models are going to get. And we are about to see the biggest launch of good compute that's coming online, massive build-outs that are coming, and what are the models that are produced on top of that? And I get giving the premium to Salesforce. I don't get selling off the companies who are spending this money. That's wild to me. Do you think Google, at making like, what is it, a 30-something% return on invested capital every year since being a public company, is all of a sudden going to care zero about your capital? Do you think that artificial intelligence has come out and then that's made you a good arbiter of their capital and them a terrible a terrible spender of capital? You get to judge what they're going to do, and they're going to be bad at it all of a sudden based on what you know about their company and what they know about their company. That seems wild to me, especially whenever it's optional spend. They don't need to spend it in order to survive. They're doing it because it's advantageous to them. They're spending this capital because they see an opportunity. That is the wildest part about this, is the drawdown on the semis and the big tech and these sort of plays. Google is semis and SaaS bundled into one. Yeah, and a bunch of other things too. A media company and ad tech and all that stuff, all bundled into one. So Microsoft is still not a buy. I don't know how you get to that. I'm a huge fan of of Microsoft. I think this is very similar to the comment that we just saw on Google, a mix of both SaaS and semis. And it's wild that, we're not up even more. And I think it's because people are worried about the spend. Thoughts on Zeta? I need to learn more about Zeta. Yeah. Okay. But Tesla about to break below 300 here someday. Like it's looking quite close. At what price do you buy Tesla at, And then you look at the PEs and the Ford PEs. Remember, the performance-based stock units for Tesla that, would pay Elon is only if like this company becomes like or at the highest side, becomes like a $8.5 trillion business or something. Like it's wild. You're going to need a lot of sales in order for that to take off. He felt confident signing that. Mind you, the last time that he did this, to the people who have been around for some time will remember it was wild to assume that this guy, Elon Musk, if he had his performance-based stock units payout, would make him the richest man on earth. Because he was nowhere near the list. Okay. Now that everything worked out the way that it did in 2019 and 2020 and 2021, obviously hindsight's 2020, but his goals that he had to hit in order to make those PSUs pay out was an unbelievable feat. Can he do it again and get this company to 8.5 trillion? And is it worth taking a bet on this company at, let's say, a sub $1 trillion market cap in order to find that 8.5x over the next, 5 or 6 years or whatever it is? So, yeah. Lumentum and Coherent look cheap. I doubt it. I mean, they could be very red, but even then, like Lumentum at 704, 124 PE. I think that these companies will expand their earnings greatly, but I still would never call them cheap. And I know it sounds wild, but like Micron still looks extremely cheap. Wait, semi-analysis, I think, is rounding out their... Okay, wait. Let's read this. The ClusterMax team would be happy to include XAI and Meta in our next NeoCloud ranking. We'll need one of your dev clusters for 5 days for thorough benchmarking. We would especially like to verify that your Kubernetes management is up to spec. Please let us know. Okay, so we're still not seeing a rush on the semi-analysis ClusterMax 3 ranking. That's going to change so much. Like what happens with IREN and CoreWeave and Nebius and all of these things whenever we see them come online. It's going to be wild. Nebius, I'm praying, gets that platinum status and CoreWeave keeps it. Praying. Yeah, CapEx increase, market sells Micron. It's wild. I think the market's also selling it because of how hesitant that they are, that like because the market is screaming to slow down, that some investors are looking forward and saying, okay, well, eventually the Mag 7s are going to listen. That their boards will reject the spend. And so maybe there's some looking forward on some of the CapEx beneficiaries and saying, dude, if Google spends $350 billion next year, like investors are going to riot, and then they're going to have to say, okay, we'll only spend, $275, and then Micron should go down on that news, but the market's already front run that story. CoreWeave to 40. I mean, legit, I'd be so happy to buy CoreWeave at 40. I bet you during this spend, there's not been a single freaking person or company that has stopped using CoreWeave whenever the stock is going down. They don't correlate. They're two different stories. The stock does not pay for their debt. The stock does not pay their employees. What's keeping the lights on is the business. And the business right now is telling you, Google is telling you, they want more data centers online at way higher GPU prices than we've ever seen before in history. If they sign a deal with CoreWeave, it's going to be at extreme premiums to CoreWeave. Are they ever going to turn a profit, though? This is the comments that you see whenever stocks are down. CoreWeave's been like a public company for 2 quarters, and people are like, but are they ever going to turn a profit? Like, bro, this has been their business model for like 18 months. Yeah. Also, why are you worried about profit when like right now, whenever they're going from 2 billion to 5 billion in revenue? Let them focus on growing. Whenever a company is growing, you impact 2 things. If you want to grow really fast, you need to give up one of 2 things: time or margin. CoreWeave sure is not giving up time. So they're paying in order to grow. They have $99.4 billion in backlog. Right, exactly. CoreWeave is a $500 sock. Okay. Let's see. Palantir grows earnings and revenue. Well, yes. They're an anomaly. They are a super anomaly. But it's been a pretty awesome opportunity to buy this company so cheap. This company I thought would just stay like a Shopify or something. It would just stay expensive. And honestly, it has. Like, even whenever it went down to like 108, it was still like 100 plus PE or something. But yeah. Okay. Do the momentum go next? I'm going to let you try again, Miguel. I can't even try to piece that together. Where is the momentum going next? It looks like SaaS. But for how long? How can you take a company serious when they can't make a profit, when the environment is the strongest it'll ever be for them? It's like Amazon 2020. No, bro, it's like Amazon 2004. That's what it's like. And Amazon was not profitable while e-commerce was exploding for 20 years. But you're not going far back enough to realize the journey that Amazon's been on. They only recently just went profitable with Amazon.com. And you're picking a time in a company's, 30-year history, in the most recent time after they've already grown, and saying, look at what this $1 trillion company can do with its extremely profitable 600 million square feet. It was probably somewhere around that of build out already. How do you think they got this 600 million square feet? Amazon is probably the greatest example of proving my point, but you're picking a timeline that's suiting you, not suiting the fact that they started, and I even gave you to 2004, but CoreWeave's not been around that long building out data centers after they transitioned their business. The build outs really started right now. Amazon's been doing the build out for decades at that point. So I really do appreciate you bringing up that comment. You tried to do like a gotcha, but it's like the greatest company that proves my point. You don't need profitability right now if you're gaining market share. Okay. Let's see what else is moving. A lot of these companies have been this price. Salesforce doing very well. Reddit even up 7.7%. It's weird. Like, why did Reddit sell off in the first place? Like, what part of Reddit was caught up in the AI trade? Like, they spend like, what is it? Less than $10 million on CapEx? You know, like they build out another office or something. I'm surprised that it's up so much. Like what today is causing it to go up 7.5%, other than what we've seen on previous quarters, which is just, you know, better earnings, more people on the platform, more usage, higher ad rates. Did they get a data licensing deal? I knew that they were in talks with Google. Let's see. They had internally discussed cutting off Google's access. I'm not seeing any news on that. I think it's just talking about a recovery from Wednesday. Nearly made back the senseless dump investors made around its AI deal rumor with Google. But this is the thing. You know, you see these comments where people say Tanner can't see the bubble, and they're talking by like a day-by-day playbook. You know, I don't see the bubble. Micron has tripled. Like, I'm up like triple on my position. You know what I mean? Like, the bubble's not popping. It's a bad day. And then tomorrow everything's up 5%, and then it's down 5%. We're back exactly where we were. Like, it all depends on the time frame that people are looking through. Yeah, it's just a software day. The flip-flop continues. It's wild, though. Could you imagine being a swing trader in this market, looking for these types of catalysts? I know the traders in the in this market, or even option sellers, are just printing here. Because the volatility is high, but the price has been pretty consistent. So you don't even have to give up your shares, but the odds that the price is going to be higher or lower because of that volatility, you could pay a lot for that. Yes, Nate, that's such a good point. If this was actually a bubble, AI and CapEx names would be up. I remember whenever, what were the names? There were a few names very recently that had just seen like euphoric moves higher. And I was like, ooh, you know what? This is a lot of good news, but the market's actually taking it very well. And that's a little bit scary. You know, so this is a great point by Nate here in chat. In these cautionary times, these aren't signs of bubbles. These are signs of people are doing wait and sees. Let's go ahead and actually see if the market or if these companies can prove out what they're saying. And they're being very patient. It's actually a little bit way healthier. But it means that if you're right and Google is going to see great growth and high margins on the spend that they're seeing, you're getting an opportunity to buy into a name that could succeed if you're willing to take that bet. It's probably just a pullback. I mean, it's exactly what it is. All right. Literally a post from Brad Freeman here. I love this. We're so back. It's so over. We're so back. It's so over. On and on and on and on. Okay, let's continue with some of the actual news, though. We talked about Elon Musk's prediction that money won't matter in 2036. Pretty wild. I'm curious how that makes you feel if you are a SpaceX or Tesla investor, or any investor, really. It won't just affect those companies. At the same time, Sam Altman was coming out and saying, we're working on the hardest problems and we're in the most transformational time in human history. He says a very particular word here. Let me know if you guys catch it. Put it out in chat if you hear it.
And the thing that drives me the most is like, this is the most interesting, important thing I can imagine doing. And we are now like in the singularity. Like this is the moment. For the last 10 years ago, this was like a kind of far off dream at best. It seemed very improbable. And now we're like actually in the moment that we used to like talk about at the lunch table in a very not serious way. And so the thing that drives me is I've been waiting for this my whole life. And I think it's going to be incredible, hugely positive, awesome for the world. I'm excited to get to work on that. I also think some of the alternative visions painted by other companies are like quite terrifying. I'm going to make sure that gets pushed against and is not what happens. But the main thing of what's different than 10 years ago is like, we're actually in it. Like this is the real, I think it is both true that it is all one crazy exponential and any one moment is not like the tipping point. And also that we are somehow in another one of those decisive periods where the curve can go one way or another, like it was when we started 10 years ago.
Are we in the singularity? Is that where we're headed to? Pretty wild regardless. What do you think SK Hynix will do tomorrow in the earnings call? Appreciate the donation. Is that South African? Oh, I don't remember. I got to check. No, Saudi Riyals. Riyal, sorry. No. So what was I going to say about SK Hynix? I think the numbers are going to be really, really great. What are they going to do or say? I've got no clue. AI in terms of AI, or sorry, singularity in terms of AI can now develop itself. Yeah, we may be close. That's the thing, right? Singularity, Turing test. No one even talks about the Turing test because we blew past it, but it was literally a point where people kept talking about if we were going to hit it or not. And by the time we knew it, we were way, way past, and the goalpost kept getting pushed and pushed and pushed. But I don't think anyone questions whether or not that we've already flew past it. 550 joules, stay hydrated. That must be the greatest. One of those. I'll take a big sip. Thank you. I wish I could see the actual icon on stream. Thanks, though. Okay. SK is going to raise CapEx. I mean, they're going to make a ton of freaking high margin profit. It's going to be wild. But let's check CNBC really quickly and hear what's going on. Nvidia to back OpenAI data center buildouts. Let's listen to that. We already know about this story. What's surprising is how long we've actually known about this story, and no one cared the first time around. Anyway, Let's have a listen.
OpenAI in talks to line up a $250 billion deal with Nvidia for what could be its largest AI data center yet. Our Kate Rooney has details on that. Morning, Kate.
Hey, Carl, good morning. So yeah, this is according to a source familiar with those plans. OpenAI is negotiating with Nvidia to guarantee about $250 billion in data center loans from what we're hearing. I am told the deal is specifically for this 10 gigawatt site in Ohio, which would be the largest in the U.S. and the latest in OpenAI's already ambitious AI build-out. No comment from OpenAI or Nvidia on this, and I'm told negotiations are still ongoing. These are sometimes known as credit wrappers. We are seeing more of these in AI lately, so tech companies are using their balance sheets to help the AI labs get more favorable terms on loans. Private companies don't really have the same access to public debt markets. There is also notable government involvement here. I am told by this source the Ohio project is being built on the Department of Energy Land Commerce Secretary Howard Lutnick has been key on these negotiations. From what I'm hearing, it is a former uranium enrichment site owned by the DOE. Wall Street Journal, first to report this news, also reports that Anthropic and Microsoft have been among those bidding on this Ohio site, and that energy in this is being funded by the U.S. And Japan as part of trade negotiations. It also comes, guys, as Sam Altman is in Washington, D.C. today and this week. I spoke to someone who's been briefed on his plans. The OpenAI CEO, from what I'm hearing, does plan to preview the company's newest family of models. He will talk about all of that with us in a string of meetings with the Trump administration, as well as senators and economists. He does plan to introduce this idea of AI teams to policymakers and underline productivity. Timing is notable on all of this. OpenAI did jump into this open source debate late on Friday and came in and signed that letter last week that we saw supporting open source. It was signed by Nvidia, Microsoft, Meta, and others. Right now, rival Anthropic is the only holdout in that, guys.
Kate, can you flesh out SoftBank's role as a developer on this site?
Yes. So a big backer of OpenAI, and this is, again, according to the journal reports. We don't have reporting on the SoftBank involvement, but a big backer of this. It's also SB Energy, which is backed by SoftBank. And so speaks to the interest that SoftBank obviously has in OpenAI and the negotiation power, the leverage that SoftBank has when it comes to these data center buildouts. They have a financial stake, according to the journal, in all of this. And Nvidia, also a big partner and investor in OpenAI. So there is a little bit of, they are incentivized to have OpenAI succeed here, be able to do these build outs, and then therefore spend more on chips. For SoftBank, it also speaks to their investment, wanting OpenAI to succeed. And as part of that, their moat, as the company has argued, has been compute. They need to have enough compute to run these models, to have what they've described as a competitive edge. And it all sort of plays into what OpenAI sees as its advantage at a time when compute is becoming a very scarce resource.
I remember when Masa came to the groundbreaking, it was right after the Japanese prime minister was in town. This was back in March. And I mean, it's a huge deal. He said this is going to be the biggest source of power generation in the world, if not just the U.S. Okay, so clearly, this is their project. I guess the question is, now that the market is not so thrilled that Nvidia has to potentially put up a few $100 billion more, like if that changes any of the plans, because the companies haven't held back from spending, but the market has changed its view on that.
Well, it's interesting. It comes at a time, too, when there's been a lot more skepticism about debt fueling some of the AI data center build out. I think this is a layer of that, of if these loans are being backed by other tech companies, and this is not the only example. We've seen Google and Anthropic do something similar with these credit wrappers. If it does add to some of the jitters around debt and that sort of financing, that flavor of financing when we talk about this build out.
We're just in the jitter stage right now. And honestly, I think it gets worse before it gets better. I don't know. I think Nvidia is going to be backstopping a lot of these types of build-outs. They're one of the few companies that have the cash flow and the balance sheet actually to do this. And then on top of that, they can guarantee that, hopefully they see a great return on the money that they're already spending, getting interest payments. And then on top of that, people are coming and buying your chips with that money as well. Okay. It's just the gully. It's just it's just jitters. It's just the gully. That's all. Okay. Any 5% down day on Nvidia, you just buy and wait. I've not bought Nvidia in a while, and I probably won't. I already have too much. Well, I think that it's exciting. You can look to some of the memory names or, neo clouds and find these 5% down days constantly. It's all the time. 2% down is the new 7, or 7% down is the new 2%. Wild. Ooh, Uber and Waymo. Did they officially unwind their partnership? That was not good. I don't hold any Uber, but one of the bull cases was that Waymo was partnering with them and they saw some of the highest uptake. But I guess they're just not willing to pay the margin to get to a market faster, and that people are willing to download a new app and they're willing to pay for Waymo rides on their own. Okay. I'm out of SanDisk and Micron now. They're going to plummet, in my opinion. They definitely could. SMCI's earnings are going to blow Tanner's back out. What the? Didn't they already give revised guidance? Usually if you revise guidance, earnings are pretty close to where you said that they were going to be. But we do have PayPal tomorrow morning. I don't know if I'll be live for that. We've not covered or watched PayPal's earnings over the last couple quarters, so I might not be live for that one. We do have Bloom Energy. The market closed tomorrow. I will be live for that, Bloom. SoFi on Wednesday. Of course, we're going to be live for that. And then Microsoft, Meta, Robinhood, ARM, all of those companies, the earnings close on Wednesday. All right. Is this Nvidia OpenAI news bullish or bearish for CoreWeave and Nebius? I guess you could paint it negatively, that the model providers are willing to build out their own data centers. Maybe you don't need a cloud service provider. But I think that the demand is so high that it's not one that I would think that is actually going to materially impact their earnings. It's like saying, whenever Nvidia ends up growing earnings by 100% next quarter, how bad is that for AMD? It's like, well, I mean, they're competitors, but it's not really related because the demand is so freaking high that both companies are selling out as much supply as that they can get their hands on. It's just a matter of whenever the demand starts to dry up, that's going to be the problem. Whenever people are not willing to spend for tokens. And people are talking about this bubble bursting because stocks are down on a day. And it's for real, whenever you guys look at the data, it's the complete opposite. The demand is getting bigger and bigger and bigger. We just saw from Google, their backlog, after digging into it pretty well, they grew by 82%. After digging into it, their backlog was up more quarter over quarter to now over 514 billion. It's not even stagnant. We're growing the backlogs while growing revenue by 82%. That's wild. So spend's increasing. The models might change around. We don't know if it's all going to be Anthropic or if there's OpenAI is going to see some of that spend, or Nvidia, Nemotron Ultra, or Kimi K3, or DeepSeek, or whatever the next model is going to be. But engineers are looking to spend those tokens. They're spending more and more over time. Demand is getting bigger, and yet still no one is making money. It's not really how it's working. And I know a lot of people are joking, but I think that these comments are actually making some people believe these comments. But it's like if you I'm going to go back to setting up lemonade stands, you know? If you look at the amount of lemons and water that you're using and then how much you're selling the lemonade for, you are making money per lemonade. But the stand costs money. Okay? So if you set up your first stand and it was so successful that this little kid wants to buy a second one and a third one and a fourth one, you're going to be down for a while because the initial stand costs a lot. But every lemon and water, you're making profit on. If Google, Meta, well, Meta's not a good example because they're not a cloud service provider. But if Google or Nebius or CoreWeave or any of these companies stopped building and they just utilized the GPUs that they had today, they would all be profitable. 100% of them. 100% of them. Token sales are profitable. The problem is that they're buying for tomorrow. And every tomorrow comes and they're buying for the next day and the next day and the next year and the year after that and 5 years out. And that's why it's unprofitable. Because we're looking way forward. So, I would look to the operating margins of how these companies are doing and see that Google and AWS and Microsoft Azure are making tons of money, and they want to keep that going. And sentiment is negative, and that's okay. Your thesis is no one will think for themselves for the increasing demand. I don't even know what you mean. I think every single company and business and organization is thinking for themselves. I think that what they're seeing on the other end is more sales of their own. They're charging usage-based tokens. You know, Salesforce and ServiceNow and all of these businesses are changing their businesses to not just be seat-based. They're charging for usage. And so they are asking for more supply if companies are using models through those businesses, and they're happy to sell it because they're selling it for more. The end consumer, like me, is happily using all the AI services I can get because it's the way I do research now. It's the way I'm building new tools to help fill spreadsheets for me, or to help build my website, or to help, you know, build presentations or something like this. And so that works out. And I'm happy to keep doing it because it's working out. You know? Yeah, if it's not seen as profitable or not as much demand, companies will stop. But it's so funny, like even Karp said, like every company is pissed spending Anthropic tokens. What part of Anthropic tokens is necessary to your organization? You weren't even doing it 2 years ago. You know, they can't stop because their engineers are addicted and they love the product and they love the outcome. They just wish that the margins were better. Okay. But let's go ahead and see where oil is trading. Oil's crashing, actually. It's nice. $82 a barrel. We've seen it cheaper. We've seen it cheaper. I think this is off the back of Trump saying that they are going to have a meeting with Iran. But we're still just a little bit a ways from where we were not too long ago. So we're not $83 a barrel anymore, but we're not quite in the 70s either. When did Trump say that? Well, I can get you the exact time. It was on X. As you can see with the You can almost imagine exactly where he said that. If I were to likely guess, it was probably around 2:30. Or sorry, no, that's from the 24th. Well, okay, so was that the comment about them not doing strikes over the weekend then? Which was this. Was that on the 24th or 25th? That looks like the 25th. Trump halts planned Iran strikes. Trump reportedly ordered the United States military not to carry out plans of strikes on Iran on Friday, having previously approved the attack plans, according to Axios. Okay. If we could, selling at market open, if we could stop selling at market open, that would be great. Yeah, are any of you guys thinking that this is going to get worse? And by what I mean worse is I'm not worried about your like your feelings or something like this. What I'm saying is, like, which ones are you actually acting on? Are you selling out of Nvidia or selling out of Micron or something like this because you think that the show has actually changed? You know, red candles coming out here in the NASDAQ right now. What is it now? Okay. I'm never going to get a non-squeaky chair. It's ridiculous. China has begun limited production of homegrown immersion DVU lithography machines. Okay. I'm not seeing anything just yet. Let me check. Is Trump on? No. Trump's not on right now. CXMT to receive early domestic DUV lithography units after historic IPO surge. Okay. I sold Nvidia and CoreWeave, felt good, couldn't sleep at night, and over allocated. Hey, that's fair. That's fair. If that's right for you and you feel good after you sell, and then I think that that's a great way to do things. Paper hands. Okay. All right, brother. Trump is speaking at 2:50. I got a guest joining at 3 o'clock. I'm rotating to SAS. I don't have any AI exposure except Palantir. Okay. I don't mind a little diversification in the crowd. I like that. I guess the guest is not Trump. Yeah, it's not going to be Trump today. I didn't get the president of the United States on the Future Investing podcast. Okay. Meta is almost flat today, down 0.15%. We were at 611 this morning. I think that's also the crazy thing about today, is really just where we were for a lot of these names. Nvidia was at 208. I think last Friday. What did we get to? 211. Even this week, we ended up seeing 214. Now sub 200 once again. 214 to 196. My. How the turntables have. Do you have any more CEO interviews in the near future? Yes. I'll say that there's definitely discussions, but I can't talk about any of them, obviously, and they're all going to be after those company earnings. But not going to say which ones. Tanner, was there a point in holding Nvidia where the valuation was bothering you? I have a big allocation to AMD and feel the valuation is steep, but the future of the company looks insanely bright. Yeah, probably a few different times. But I think if the future looks insanely bright, then, you know, that's going to be a great thing to hold on to. Are we getting a Zuck's interview? I wish. I can confidently say it's not going to be Mark Zuckerberg this time. But there's definitely some exciting ones, for sure. Dude, if I ever got Warren Buffett on the show, I wouldn't say a word. I am a listener of Warren Buffett. Okay. All right. Let's see what else we have going on in the markets. Oh no, Michael Burry's tweeting. Michael Burry's doing a little bit of a victory lap here. So funny. It's all good, man. You know, do you. You won the battle. Let's not the war. Let's get ready for the next round. Nvidia is at the center of circular AI deals. Anthropic, XAI, Mistral, Oracle, Nebius, Figure AI, CoreWeave, Nscale, AMD, Corning, Intel, Amazon. Amazon is not doing direct deals. Oh, maybe he is doing direct deals with Nvidia. Definitely buying the chips. Wild. They said, ta-da, on Hammerstone Capital, Hammerstone Markets saying Nvidia's down 4.5%, SK Hynix down 9%, CoreWeave's down. Wild. Nvidia is accelerating a streak of investments that skeptics warn is artificially inflating demand and valuations across the industry. Big names from Goldman Sachs to investors, Michael Burry of The Big Short, fame, have for months warned about the secular nature of such agreements, where Nvidia finances and takes stakes in companies and projects that use its chips, and yet the pace of those deals are only quickening. It's not actually been quickening that much, but yeah. The fear with these transactions is that they may skew demand, spur bad decision-making, and magnify losses in AI if AI fails to turn profits for those investing hundreds of billions of dollars in the technology. And yet, the pace of those deals is only quickening. Circular deals, like their cousin, the Ponzi scheme, require consistent activity in the way of new funds, continuous hype, and the stoking of FOMO. And Michael Burry is doing a victory lap on that. We'll see. We will see. The day that I see a data center or a GPU that's not being fully utilized, I think that there are concerns, or that there's needing something else to happen, or new models or something like this that would signify that demand is slowing. Haven't seen it. We've only seen SpaceX have a data center, and Google and Anthropic and Reflection AI spend multiples of what the market rate are so then they can have it right now. This guy every day, man. This dude gives me $2 every day, and then he's like, I gave you money. I demand you read my super chat. And every day he does this. And it's like, thoughts on a company I don't follow? I'm like, dude. Super chat, dude. I gave you $2. No, I've got no thoughts on Applied Digital. Okay, fair enough. I'll send more. Fair. Poor guy just wants help. It's I'm not even joking. It's every day. And I don't know anything about these companies, you know? I don't follow Applied Digital very closely. Okay. My reaction, my take on the reaction to Nvidia backstopping OpenAI is that they are scared that if OpenAI doesn't execute its commitments, that Nvidia is on the hook. It's like how the market is treating Oracle. Yeah, I think that's very fair. I'm curious if there's, you know, any backstops to say, hey, if OpenAI goes out of business and they can't pay this, could we end up selling this data center to another provider? Like, I don't think that the winner has to be OpenAI. And I'm not betting on any of the model providers other than Google, and I'm not betting on them for Gemini. It's a part, but it's not the only reason. But like, if Gemini becomes the main model, or Anthropic, or a mix of a bunch of different models, could that 10 gigawatts still be, you know, getting full utilization just with another business or businesses? Yeah. Poor guy just got scammed. It's literally like a it's called a donation. Scammed. I'm loving my Tesla short right now. I'm not brave enough to do that. I'm not brave enough to short Elon companies. I think that's wild activity. No interview today. We have an interview at 3. I was going to do a separate segment as well. I didn't quite get it done. It was a little bit of a not lackluster. I was just slacking. I had a beautiful weekend. I just wasn't working. Also, dude, getting new accountants is driving me insane. What do you guys even do? Like, these accountants reach out and they're like, yeah, fill out all your expenses. I'm like, that's what you do. You do that. What am I even paying you for if I'm telling you how much I owe the government? Here's a list of receipts. I got my QuickBooks. You figure it out. Oh, so that was a couple of hours out of my weekend. And then obviously took the beautiful fiance out to dinner. Went to go see a movie. Very nice. Went and got breakfast with my brother. Always great. Keep your family close, I guess, eh? When did you get engaged? When did I get engaged, guys? A month ago? 3 weeks ago? A month ago? And juggling. Juggling, of course. Dude, I am not that guy. All you guys send me that freaking TikTok of that. He's just throwing up, juggling. He's dancing. He looks like me. I'm not even going to lie. I have to do some double takes. He's got the mustache and everything. But yeah. I will strongly consider the rules sell in May and go away next year. You say that, right? It's always the year where you decide to act on it. That's the year that it breaks the rule. Because it's not it definitely does not have a 100% success rate. You know? No, that's bookkeeping. They do it both. I'm paying for a bookkeeper and an accountant. And I used to have it at separate places. And now I'm going to my accountant and saying, can you do my bookkeeping? Because my bookkeeper, she's a very nice lady. She got quite sick, something like this. So she's not doing it anymore. So I went to my accountant. I said, do you guys do these services? They say we do. And now they're wanting me to do it. They want me to pay them for me to do it. That's what it seems like the business is. It's a great business. I should get into it. Why don't you use AI to do it for you? Mainly because I don't know how. I don't know. That's like one of those things where I want AI to be integrated into the software that I already use. You know, I want to pay a SaaS company to use ChatGPT. I don't want to build my own homegrown QBO. I just want QuickBooks to do it. Okay. Let's take a look back at... Yeah. Just tell Codex to make no mistakes. I always do. I actually put it in the instruction part, so it goes across all messages. Make no mistakes. Okay. You're buying more Nvidia? No. Tanner, you think that Burry has time until midterms because he's playing the volume and he knows that this is a time period that works? You know what? That's a really good point. And sometimes, you know, at the beginning of the year, you always talk about that. Hey, midterm years can be a little bit more rough. And then in the months after, you kind of forget that. And then you're looking back on it, and you're like, why does this freaking year have to be so volatile? And then you realize that there's like these headwinds as well that also persist and are continuing, where you're like, hey, no, you're right. It's a midterm year. It's a little bit more rough. And there could be people who are taking advantage of that and taking advantage of it, you know, very well. Okay. I'm not buying anything today. I need to look to free up some capital if I'm going to be buying. I don't really have cash to buy anything. Okay. What are some companies that you guys would want me to sort of look into over the next few days, like during this week? I mean, obviously we have earnings, so I might just be fully focused on that this week. But I also might want to look into some different businesses. Zeta, Bloom Energy. Bloom Energy we will be listening to tomorrow. I'm super excited. Kratos, BMNR, Estee Lauder. The new accountant stole all of Tanner's money. No, it's just for bookkeeping. I just want like quarterly updates, you know? Vertiv, AOI. I do want to look into AOI for sure. Should have drafted BMNR. Instead of drafting BMNR, I drafted Coinbase. Just seemed a little low risk or lower risk for me. But if there is an upside in crypto, we're still going to see a massive run. So I'm not looking for like 300% gains in the draft. I'm looking for like 80% winners. That would be really what I'm hoping to see. Now, to be fair, the people who did see the 300% winners obviously did the best. You know, Steve had Micron and everything else failed. But Micron was enough to pay for the 9 other losers in the draft. You have earnings, FOMC meeting, PCE, and GDP. Yeah, no, it's going to be a busy week. You're right. Centrus Energy. Yeah, LEU should have earnings soon, right? If it hasn't already. LEU. Earnings in 9 days. Okay. Yeah. We've got Palantir next Monday, along with Grab, AMD, Zeta. This is next week, guys. Like, not only are we, you know, super swamped. Am I hitting the right F keys? Okay. This is this week. We've got Navitas after earnings, Applied Digital after earnings. See, I don't even have it checked off. Don't even have my alerts up for it. PayPal the next day, Visa, Bloom Energy, Lending Club, which is actually now, what is it? Not Borrow, Happening Bank. So I actually care way more about, and I should be following Seagate as well. That one's going to be huge. I care way more about Bloom Energy than I do Visa. Bloom Energy, I'm actually super excited to see what they have to say. But Visa is in my draft. So for the draft, Visa will be a really big one. I hope they win. Every big bank said that consumer spend was not only healthy, but a ton of spend. Really excited about that. Seagate, that should also be very good as well. So those look great. Actually, what is Seagate even estimated? $3.5 billion in revenue, up from 3.1 the quarter before. Wild. Okay. Let's go see what CNBC is covering right now. I don't know why it signs me out. Okay, there we go. We have a lot of Nvidia OpenAI talk. CXMT. Yeah, let's hear a little bit about this, actually. The stock is up, I think, like 465% today.
The company that could be China's best hope to build a homegrown chip industry, going public in Shanghai overnight. Eunice Yoon has more on that for today's Tech Check. Is it IPO mania over there, Eunice, or is it just this one?
Well, this one has a whole lot of mania. CXMT's shares popped by over 500%, and this has made the company the most valuable that's listed in mainland China. So the company itself isn't a household name here either, as in the United States, but it is the largest memory chip maker. It raised $8.6 billion. It says it's going to use that to mass produce memory wafers. It currently holds 8% of the global DRAM market, and it's made progress in a more advanced memory chip, DDR, and it's hoping to be able to scale up an even more advanced chip called the HBM, or high bandwidth memory chip, that's used in AI data centers. So that puts it squarely against the likes of SK Hynix, Samsung, as well as Micron. And investors see CXMT as a national champion and really critical to the country's efforts to become self-reliant in memory chips. The investors of CXMT are largely dominated by government entities, and they are local governments, as well as the national, what we call here the big fund, so the National Big Chip Fund. The sentiment towards CXMT is also giving the IPO a boost, and that's because in the past week or so, there's been a tech sell-off, and then securities regulators had scrambled a whole bunch of meetings over the past week, trying to get everybody on board and saying that that Beijing prioritizes what they describe as a stable market operation. And that's been sending a signal that the money is there, that the support is there from the market side to be able to get some money flowing into the tech sector especially.
Welcome back, OpenAI.
Okay, sorry, I was muted. I was like, what the heck? Yeah, it is crazy. I think it's now China's biggest company. Did they say that? Just before our next guest, I'm just going to get something quickly to eat, do like my little 2-minute break here. While we do that, though, I'm not going to leave you guys hanging. I just want to play a little Dan Niles clip on Apple. So I'll be gone like 2 minutes. I'll be right back.
I referenced earlier how Apple used to get bashed for not having an AI strategy or an AI plan, and now it's beloved because it doesn't have the AI capex that everybody else has. Do you buy that now that the street has sort of soured on how much this is all costing to build?
Yeah, I mean, sometimes you get lucky for being incompetent, and Apple really was horrible in terms of getting AI onto these phones, which in hindsight turned out to be great because, as you pointed out, Sarah, you got their biggest partner, Google, spending $200 billion in CapEx this year. Their cash flow has gone negative for the first time since they IPO'd in, I think, 2004. And so they get to kind of free ride off of that, pay them a couple of $1 billion to put this on their phone, but a couple of billion is way less than $200 billion in CapEx. The biggest issue with Apple is obviously at a high 30s PE, with the S&P at 22 times. Like in the near term going into earnings, you have to be a little bit careful because these things can whip around. And if Apple's numbers are too high because semiconductor prices have skyrocketed so much and margins come in less, then you can't put all the money in the world into this one stock because they're just not spending on AI. It doesn't make sense at a certain valuation. And so that's the issue with Apple to some degree.
So then
but longer term, it's great.
So then do you like the setup of some of these other, the Amazons and the Metas into earnings?
No, I mean, I plan on sitting on my hands for most of them because for each one of them, and I put out a note on Sunday talking about them, I've got different sets of concerns. So you look at Meta and you go, well, they are talking about putting out a public cloud and an LLM API. Well, does that embolden them to spend more on CapEx because they go, oh, I've got an outlet in case I overspend. With Microsoft, you sit there and you go, that's a really high bar. And for Amazon Web Services as well, you had Google going from growing their cloud business, I think it was 63% in the June quarter, to growing it year over year, 82% in the September quarter. Google stock was down 8% last week because their EPS didn't go up, barely went up, and you had the CapEx getting cranked. And even though they crushed the expectations on Google Cloud, the stock got hammered. And so you got that bar to clear for both Microsoft and Amazon. Don't forget with Amazon, you got oil prices that have surged, which will hit their transportation costs as well as.
Welcome back, OpenAI.
Well, that was a odd time to end. My bad. Let me find another video real quick. I'm like mid-chew. Okay. Google's CapEx is not cause for alarm.
And the debate over how much AI spend is too much or too little continues. Apple, by the way, hitting a new all-time high today. Let's bring in Michael Sansatera. He's the Chief Investment Officer at Sylvant Capital Management. Michael, how are you getting ready for things?
Just going through all the numbers, making sure expectations are manageable, and getting prepared to see the deluge in numbers we're about to see this week, Wednesday and Thursday.
What was your reaction to Google's CapEx number last week?
Actually, we were fine with it. There's no surprise. There shouldn't be any surprise to AI investors at this point that 2006 and 2007 CapEx is still going higher. The good news is the rate's declining, if that makes you feel better. But we're okay with it. We recognize this is a grab compute time. This is a time to extend your lead if you are Microsoft or Amazon or Alphabet. That's what they're doing. No surprise for us.
How about these, in China, CXMT, we've been talking about this IPO for several weeks now. They don't do the highest level, memory stuff, the high bandwidth memory specifically for AI, but they do a lot of the rest of it. And it's a very tight market. What's your response to the IPO? Is it something you'd consider investing in? Does it disrupt the likes of Micron and other memory names here?
Yeah, we don't think so. It's not something we're looking at closely right now. Of course, we'll take a look at it as time passes, but I don't think that lower end of DRAM is particularly attractive at this point. You want to stay a little bit more focused on the higher portions. Now, China's been making this stuff for some time now. It's just a matter now of how much bigger will they get. And the market itself in China is really quite large as well. So I don't know that it actually has to cross over into the United States. I suspect that they'll have plenty of business in China, probably be very, very focused there for a while. Right now, we're not looking at it.
That DRAM chart we're showing right now, kind of from April up through now, you can see it going up the hill. It's round hill memory ETF and coming over the hill. It's really moved broadly lower in the past couple of months.
Yep.
How do we finish that chart, you think, into the end of the year?
Yeah, I think you have to be a little bit patient, but I think we're still higher over the next 6 months. Remember, if you look back even at the SOX's retracement, it's been a 25% pullback, largely due to memory, and yet it's still up 100% in the last year. And earnings, broadly speaking, across semis, were up 120% in that time frame. So we overshot it slightly. And now we've seen the pullback. I think that's normal digestion. I think that probably clears itself pretty quickly. But in the meantime, it's got a lot of folks nervous. It gets a bit of a roller coaster, but ultimately the demand is still far outstripping the supply for pretty much every memory that the AI is eating into.
And what do you do with Apple? Is this one that you kind of chase into it? You wait for a pullback? You think that, maybe in the long run, turn around a year or two from now and go, all right, that was all-time highs, but it didn't get with the program. I'm curious how you're thinking about that.
Yeah, that's a great question. We are slightly underweight Apple in the Sylvant Focused Growth Fund. I think our goal has been to believe that their AI monetization was the most important metric. And I think with price increase helping revenue, but memory costs hurting gross margins, we're kind of in a blank spot right now with Apple. I think part of the reason why the stock's done well recently is they're not cranking up on CapEx like everyone else. So they're not really a hyperscaler per se. So I think they're getting a little bit of hiding in there. So we like it a bit, but we don't like it enough to be over to the index weight. It's more of a risk control position for us.
Finally, what do you think about this Nvidia deal, kind of helping to provide backing for these data centers that are super expensive? This one's for, I think, an energy arm of, what you would call them out, SoftBank out of Japan. Yeah.
Yeah, I think,
people say it's circular financing, but go ahead. It's your top holding, Nvidia.
I think it's an opportunity for Nvidia to continue to control the dominant position in GPUs, and at the same time, at this point, lend its balance sheet to the promise of credit. They're not writing a check for $250 million. They're giving their balance sheet and their ability to have a debt raise. If you look at OpenAI as an example, they don't have an investment grade debt rating yet. So you get a little bit cheaper rates longer term. This is something that's a 5 to 10 year project. I think it's the numbers and the magnitude are a little bit sensational, but I think the promise is really going to be more based on, we obviously haven't seen the details of the contract. I suspect it's going to be more based on what you can get done when, and that'll be ultimately driven by consumers and actual demand of the product. So I think it's not quite as much risk as people are building it into.
Steve here in the chat, not Steven Fiorillo, but a common chatter in the audience, one of the greatest, by the way, says, meanwhile me, I've got obesity levels of overweight in Apple stock. Amazing. Zeta is flying, isn't it? It's falling into that sort of software name, up 9.1%. Congratulations to the Zeta folk. Yeah, it's doing quite well. Doing very, very well. We love Zeta, says Royale in chat. Let's have a look at the stock here. Okay. Autodesk as well, up 8.5%. ServiceNow up 9.1%, similar as Zeta. Zeta's still only around $20.88 though. So it's a lot of this overselling to only then come back to where we were just a few days ago. That's the weirdest part about a lot of this. ServiceNow is doing some actual breaking out here, but I mean, even then, July 13th, we were higher. But there's definitely been long periods where we were under this price. Shopify 125, not bad. HubSpot, yeah, it's all really returning to the prices that we were at either a week or so ago. Wix actually pretty high here, up to nearly prices that we've seen since June 3rd. There's been some amazing market share gains on Wix for base 44. That's up very nice. Atlassian, we've kind of been at these prices just a few days ago, July 20th. BM&R, same thing. Very recently, we were at these prices. Maybe some signs of breaking out. Every dollar that we had up, though, looks more like where we were at back in May. But, long way to go before we're back to that sort of 65, 71, 74. Oh my gosh. That's a wild price. I didn't realize that we even got that high. This 161 spike was super intraday highs there. Okay. Chris sold, of course. ServiceNow is up. No, he's back in. He got out and got back in like the next day. So no shade to my boy Chris Patel. He was worried about what was going to happen on earnings. He liked what earnings ended up showing and doubled down. Okay. Would you get an Apple at that low? Or sorry, at that level? Sorry, not low. I was going to say, didn't we just pass like $5 trillion in market cap? The only buying that I'm doing for Apple is whenever Steve tells me to buy, Steve in chat tells me to buy, go in like $20 at a time. Aside from that, I don't have any Apple. Chris, the value investor turned SaaS day trader. I don't think he would call himself a value investor. I think of Chris as more like a swing trader. Is Trump live? He probably is, right? 2:50 was the time. I've got a guest joining me in 5 minutes. So we'll have him on and probably do that for about 45 to an hour, depending on the time that we end tonight. Going forward, I think I'm probably just going to run one stream all the way so then we can listen to earnings as well. I think that's going to work for most people. On the days where I'm trying to cross stream with Amit and these sort of people, we'll probably be ending the stream and then starting up with them as well, because StreamYards work like that or weird like that. You can't, jump into someone's stream while you're live. That said, we will have our guest on here in the next few minutes. Unless if they're ready to go, in which I could just transition. They are ready. Okay. I do have someone in the background, ladies and gentlemen. I was looking at Zeta stock here, up, 9.1%? 9.3% now, $20.91. I had this planned for the last, week or so of having him on to give us sort of a breakdown, but it's just luckily that it's quite a green day and maybe a good time to jump in. Ladies and gentlemen, please welcome Nick from Wealthmatica.
Tanner, thanks for having me on.
Thanks for coming on, brother. How you doing?
Yeah, I'm doing great. I mean, even better after looking at the stock price today. I mean, Zeta's just ripping off. I mean, I will say it's the broader SaaS market that's kind of just climbing up today. I think they're catching a bid while the semis are taking a breather. So it's not Zeta alone, but Zeta is leading the way. So it's pretty nice to see.
Yeah. But I'm not in this name currently. What is something that you would tell somebody that is potentially looking into getting into this name that separates this company as a ad tech or martech business versus other potential competitors?
Okay, so I could talk about this forever, but just to stay within the marketing realm for now, because Zeta is really expanding outward towards business intelligence and a whole different sort of genre of business.
I'd like to talk about that as well.
Yeah, so we'll talk about that in a minute, but just to focus on marketing in general. Marketing right now is plagued. All these marketing clouds are plagued by having these sort of plug and play siloed ecosystems where, let's just say Salesforce, for example, they have a marketing cloud, but then they have a data CRM platform, but then they have other services. They have plugins for LLMs, so you can reason, you can sort of grab data from one silo and grab data from another third-party data source and kind of attribute that all into a marketing cloud. The problem with that, it creates a ton of latency. Zeta is differentiated because it's one unified platform, and Zeta owns that data set from the ground up. So when everything is in one ecosystem with a foundation being built on top of a first-party proprietary database that nobody else has, it's this perfect ecosystem for AI to kind of scale, because then a client can bring in their enterprise data, plug it into Zeta's ecosystem, and be able to make queries, build campaigns, target specific customers or new customers or existing customers within their data set in real time, extremely fast, without actually having to data dip and going outside that data ecosystem. That's very important in today's world because marketing is becoming this thing that is kind of real time, super fast, high pace. So if you want to make those quick split decisions, you need to have a latency-free ecosystem. And Zeta is built on that foundation to be latency-free, super quick. Everything's proprietary and native to the platform and the ecosystem. Now it's sort of migrating onto the Foundry platform. So it's very unique. It gets even better because Zeta is now kind of expanding this value proposition because they're not only taking, let's take a step back because, I can kind of get ahead of myself talking about some of this stuff. I kind of forget sometimes people are new to this world and I can kind of ramble on forever. So in the enterprise world, there's two types of data sets. You kind of look at them like, one side of each of the same coin. You have demand side data and you have supply side data. Supply side data is that operational information, sort of like how is my company performing? Where's my supply chain at? How's my inventory levels, my ERP systems, et cetera, like staffing, all this type of data. That's what Palantir sort of specializes in, bringing context to that information, ingesting all that raw data, providing that contextual layer and building that digital twin. Where Zeta specializes in the demand side. How is my business interacting with the consumer? What products are successful? What does the consumer want right now? What do they resonate with? What are they spending? How are they spending? What are their credit scores? Right? All these different types of things. So Zeta has this real-time touch point with the consumer through their proprietary owned data rails. You can kind of think of that like Meta or Google. They own properties, internet properties or ecosystems where they ingest a bunch of data. It's a permissive ecosystem. Somebody signs up, makes an account, they have an email address, and so you're able to identify who that is and all these different attributes linked to that individual. So what's very unique and where Zeta comes into this picture, nobody else has really done this in the marketing world before, and this is kind of the catalyst as to why Zeta is bridging into business intelligence. They're able to take both sides of the enterprise brain, that operational side, that Palantir side, and that Zeta side, the consumer touch point, and bring that data together. So any little bit of intelligence they generate, it's within that full holistic context of the enterprise. So you're not just making a decision based on the consumer and specifically for that brand based on the consumer touch point, or you're not making a decision solely for this business based on its operations without considering the consumer and what the consumer wants, the end user, right? You're making a decision with all of that data paired together. And when you're able to make a decision and build intelligence with this unified data set in real time, you're going to have an edge over the competition, because you're able to dynamically make decisions in real time to target your customer and change your business in a very efficient manner where your competition may not necessarily actually have that advantage. So that's where Zeta comes in to the marketing sphere and kind of enters into this new vertical, business intelligence. I know that's a little bit of a mouthful, maybe a lot to digest, but let's pick it apart.
No, it is a lot to digest. I guess maybe some of my questions was about how Zeta even has this data in the first place, because I know that they have some proprietary data and stuff like this, but could you explain why they have a data advantage versus other companies?
Okay, so Zeta, back in 2017, they made this decision to kind of rebuild their data platform. They originally started with this Pixel. It was called the Zeta Pixel. For those who don't understand, you can get like a software development kit, install a Pixel onto a website, and then you're able to track data, like permissive cookies that kind of go back and forth to say, yes, this person kind of accepts for this data transfer. And so you can know what that user at that time and place, what they click on and what they do. That was just their very first sort of data rail, their ingestion point. They went out in 2017 and they bought two companies. Those two companies were Boomtrain and a company called Discuss. So Discuss is this open source, like mass, I guess you would call like a commenting platform. You could download it as a software development kit onto your website, and it integrates a comment form on the bottom of your site. And the idea was it was super frictionless, where somebody can make an account one time, and whenever they go into a site that has this, this software development kit called Discuss integrated into their site, so somebody could comment under a video, for example, like TMZ uses Discuss. So you could just comment under there and you're auto logged in every single time you go on that site. What that does, it's a permissive ecosystem. So somebody used an email, signed up, said, yes, I give you permission to collect data, ABCDFG, sort of like Meta or Google. And whenever you comment on something, it gives some information. So you can either deploy ads and somebody could interact with those ads on that site, or somebody could comment on certain materials. And it's just some data points to ingest some signals into essentially a profile, or what they call their Zeta supergraph, or a massive sort of data and intent graph that kind of, perhaps you maybe want to look at it like this profile, an Instagram profile that captures all your little touch points about what you like or what you've done in the last 24 hours. Very relevant for marketers. The other thing that they've acquired more recently, back in, I believe, 2024, is something called Live Intent. Live Intent, they had a bunch of pixels and stuff like this, but most critically, they're one of the world's largest publishers. And they're publishers for the New York Times, Washington Post, Uber, Groupon, et cetera, et cetera, et cetera. So if you sign up for one of these websites or one of these services, they activate, meaning they send out emails or promotional campaigns or promotional emails through this publisher called Live Intent. And when you, as the consumer, you sign up for one of these emails, you give permissions not only to that brand, but you give that permissions to Live Intent to collect that data and then aggregate that data so that they can better push content on behalf of these brands. Once again, it's a permissive ecosystem where somebody signed up, gave their email, the email's then hashed. Hashed is just a fancy way to say it securely makes a special code against your email, so it never discloses your email, so it's all privacy compliant and whatnot. That is another own data rail for Zeta Global. So between Discuss, Live Intent, and Zeta's own Pixel, they have, I think it's 552. It could be a lot more. I was talking to Steve recently, and I heard a couple things back and forth. It could be close to 580, but I believe right now the official number is 552 million users worldwide and 240 million American individuals within this data graph.
Wow. Sorry, I was muted. Yeah, so there's a lot of products and companies that we look at that I think are amazing companies that are very important. but a great company and a great stock can be quite different. Why do you look at Zeta as being a potential investment versus just being, a potential good company? Like, I think of like Wise Financial. I use them, but I wouldn't buy them as a stock.
I see. So Zeta primarily Zeta primarily is a data focused business. And when you have data as your sort of central value proposition, like your data is your advantage for Zeta Global, that's their value proposition. They have data that nobody else has. You become this very predictive business model. You can predict forward looking, because if your business is very data centric and you're using machine learning models to build sort of these profiles to predict human behavior, you can start building very predictive models about how your business is going to perform, how the consumer is performing, et cetera, et cetera, et cetera. So naturally, to me, this business has this sort of native factor to it that is very predictive. And because it's very predictive in that manner, it's able to produce very predictive revenues. And as they sort of scale into this new vertical, business intelligence, I see it's very promising because it creates this little bit of a flywheel in their business. Whereas if somebody uses Zeta Global for marketing purposes and says, okay, yeah, I want to use Zeta Global for marketing purposes, I upload all my consumer data, I then activate, let's say, on Meta platforms, well, then in Zeta's ecosystem, they have something called Athena. And Athena is this very cool mechanism essentially to act as this flywheel to push a client into more channels. So, they may say, hey, by the way, you're trying to activate on Meta. If you activated on Spotify or on Netflix, you would get 2 times more return on ad spend. So that intrinsically to me is very interesting because it naturally pushes that same client into more verticals, thus increasing that average revenue per user or per client. Not only that, as that customer stays with Zeta for longer, they produce more proprietary intelligence on platform. Intelligence that only is relevant and only has context in Zeta's ecosystem. It's not like that individual could just go and take that data and apply it onto some other platform. It wouldn't have context. So naturally, that client is then inclined to explore other services that Zeta has. So this is where it kind of flies into business intelligence and other sort of verticals that I think are very, very interesting.
Yeah. Now you said that revenue and potentially margins and everything become very predictable. What are some of those predictions? Like, what do you foresee for Zeta's earnings going forward?
So management right now says that the bare minimum sort of CAGR, if they look out for the foreseeable future, is the language they've used, is bare minimum of 20% CAGR. I kind of predict somewhere between 25 to 30s. I think that's more realistic. Right now, I've modeled that Zeta will probably beat their 2028 target. At the moment, they have a 2028 target of $2.3 billion for 2028. Their last 4-year target in 2025, I believe, was about $1 billion, and they beat that a year early. I believe in 2027, next year, they're going to beat their 2028 target of $2.3 billion 1 year ahead of time, just like they did 4 years prior. So what do I think long term? I think Zeta, this is probably a company that could achieve somewhere between 20 to $50 billion market cap in the next 5 years. I think that's entirely possible.
Currently, Wall Street, I'm just looking at Fiscal AI here, and while growth has been continuously accelerating, they think that's going to continue in 2026, 37% CAGR. I think in last quarter was like 49% or something crazy. I think the comp was a little bit easier, but still, the CAGR for the remaining 2027 and 2028 is like 16 or even 14%.
Yeah, I think this is laughable, honestly, because analysts haven't, this goes all the way back to the Marigold acquisition that they just did recently, last year. They have not updated any of their long-term guidance beyond 2028. So for me, it's very interesting because since 2025, they've done a couple things. One, they acquired Marigold, which expands them into a whole new audience, primarily Asia and Europe. Two, for Marigold, for growth on Marigold, they projected all the way through 2025 through 2028 flat, zero growth, just 190 million per year, every year till 2028, which is extremely unrealistic. It already grew by, I think it was like they beat their targets by 17.5% last quarter. So they projected something
for
like
Marigold's revenue.
Yeah, just for Marigold's revenue alone. So it's already growing aggressively, and management has this sort of like historic, temperament to just sandbag ridiculously, which isn't bad, but it becomes extremely predictable in that sense. Like, okay, management sandbagging is just a question of how much. Another thing is Athena. I already mentioned Athena, and what the purpose of Athena is essentially just this massive flywheel to push the same client into new channels. And Zeta's already shown that over time, when a client stays for a longer period of time and adopts more channels, they end up spending aggressively more over time. So naturally, those organic revenues will continue to expand through further use of Athena. And Athena was just released at the end of the year in 2025 into beta, and now is an official release. It's active right now. So this quarter, we should actually see some tangible results, some organic results of that acceleration. Another element, Zeta just partnered with Palantir. And Palantir is not even accretive yet. And analysts currently think at the moment that it will be accretive in 2027, where David Steinberg, the CEO, said that actually this quarter, we anticipate to sign our very first client, a part of that Palantir Zeta go-to-market strategy, and it's going to be accretive this year. And he said he wouldn't be surprised if they have 2 or 3 by the end of the year. So to me, that's very impressive and shows you that, okay, this partnership's already going to be accretive, and that Chris Steinberg, the CTO, the CFO of Zeta Global, said that each year, looking forward, they expect bare minimum of $100 million a year from the Palantir go-to-market deal, the 7-year deal. So to me, I'm like, this is very interesting because analysts and their long-term targets haven't been updated since last year. So none of them are factoring any of these growth tailwinds that are actually meaningful and accretive to that top line growth. So I think it's going to be interesting. I think the analysts are very off base. I don't think they're really looking at this corner of the SaaS ecosystem. I think Zeta is trying to grab attention, and they're starting to make some moves that are quite interesting, especially Palantir, OpenAI, Snowflake. These deals are very important. They grab some attention. So we'll have to wait and see. But I do think that the analysts are kind of lagging. Wall Street's lagging. It's not a surprise. Some of them do.
One, I thought I read that the OpenAI deal was just like them becoming a customer of OpenAI.
No. So Zeta, I should say, Zeta announced through David Steinberg at the JP Morgan 54th Annual Tech Conference, he said that Zeta has now entered into the next phase of their partnership. There was no official press release of this. I have my speculations as to why, but he did announce it at this press conference, confirming that they are now helping to place ads on OpenAI's ecosystem. So help fulfill with GEO technologies. So that's generative engine optimization, which is essentially the successor to search engine optimization, SEO, as many of you may know. And the other thing is ad placement. So those are 2 separate channels. GEO is essentially how does a brand get recognized and ranked within search results or AI results? And then placement of actual display ads is a whole nother channel, a whole nother category. Those are, I don't know, you may have seen it recently. I made a post recently about this too. OpenAI kind of made their global push to say, hey, ChatGPT ads are open. We're doing it now. We're kind of exploring it. This is what the form factors look like. And they showed some examples. Zeta is actually helping with that. And I think the reason why OpenAI paired with Zeta is because of their enterprise relationships and how Zeta is agnostic. I failed to mention that at the beginning of this, the intro, about why Zeta has this differentiator compared to some of the other MarTech names or ad tech names. It's completely agnostic, which means Zeta doesn't care who, what, or where. They're going to partner with every single surface they possibly can in order to activate ads on behalf of the enterprise. Now, that's an interesting value proposition, because if you're an enterprise and you have this massive data set, it would be, a little detrimental if you were to just go to, let's say, Google, and you were to upload your entire data set and only be able to deploy ads within Google. And any new customers you get, you would have to update that data set within Google and deploy ads in that one ecosystem. It's much easier, and it's a much better value proposition to say, hey, Zeta, we're agnostic. We'll integrate with anybody and deploy ads anywhere. upload all your data with us in one ecosystem, and you don't need to worry about everything else. You have full context amongst in our ecosystem. You have your own proprietary data set. It's completely safe. Nobody ever is going to touch it. You have access to our proprietary data and the third-party data through Meta, Google, Netflix, whoever it may be, and in this case now OpenAI.
There was a couple metrics that I wanted to go through with you as well.
Sure.
RPO.
Yep.
Last 2 quarters just skyrocketed. And I can put this on screen as well. Can you help me understand what happened here?
Yeah. See, I'm a little baffled too. I'm not too sure. I'm trying to make sense of this myself. We've had this weird sort of downtrend.
I was just gonna say, there hasn't been exact comments about just like extended timelines or anything.
No, nothing.
Okay.
Nothing. No, but all that I really know so far about sort of contracts, if you look at the revenue, you could slice it up in multiple different ways through several different business lenses. But there's one business lens you could look on to how you monetize. And Zeta monetizes in 2 separate ways. They monetize through sort of like a platform CRM subscription that many of us are aware of in the SaaS world. That's their standard SaaS fee. The other mechanism they use to monetize is a utility fee. So they started doing this back in 2021 before OpenAI, before Anthropic started using this concept we now know as tokens and token fees. Zeta does something similar. They call it a utility fee or utilization fee. And they negotiate those deals. They're 1-year deals per client for their ecosystem and the utilization of Athena or other sort of data processing and data analytics. But then on top of that, they have their sort of subscription and activation fees layered on top and baked into that SaaS cost.
Got you. And then the other metric that I wanted to look at was net dollar retention.
Yep.
To me, this spells a lot higher growth than 20%.
Yes.
If you look at net dollar retention, I think they do this on an annualized basis. Last quarter showed off 128% net dollar retention.
Yes. So
and accelerating.
Yes. So it was actually 120% if you look at it through an organic lens. But if you looked at it through Amerigold, that new acquisition plus the organic business, it actually achieved 128% and increasing. Yeah.
Okay.
You know what? One would now theorize as well. They achieved 120% net dollar retention rate in an ecosystem without that Athena flywheel. So 2026 is going to be the first year that you have Athena enabled, which pushes customers into different verticals automatically. And then finally, you have that new Palantir relationship that's really starting to brew. So I think you have all these different tailwinds that are kind of stacking up that I think could potentially push that net dollar retention rate much further.
Can we talk a little bit about that Palantir relationship? Because
Sure.
I listened to a little bit of the David Steinberg presentation of this whenever they announced it. I think they said that it was not going to be accretive at first, but they expect somewhere along the lines of over $100 million annually of new business that are coming from what I understood was like a marketplace of Palantir customers who are using their products. Am I understanding that?
Yeah, correct. So essentially, back to my original analogy, using the 2 sides of the same coin, you have your supply side, demand side data. They both bring a different sort of data set and context of data into the same partnership. Their go-to-market strategy essentially allows Palantir and Zeta to integrate together. Zeta on top of Foundry, so Foundry is the base. Zeta is ingesting a bunch of data through their ecosystem, layering into Foundry, and Foundry then powers the supergraph. The supergraph is essentially this intelligence engine Zeta has created to give you context of any sort of marketing decisions or business intelligence decisions. And then Zeta can go activate and do their thing in the marketing world. On the flip side, Palantir can do the same thing, but empower their digital twin for that specific business with the consumer data that they didn't have before, that unique proprietary consumer data that they never had. In this circumstance, in this partnership, in this go-to-market strategy, it allows one client. I'm predicting that the very first joint go-to-market client will be the Gap. And that partner would, in theory, allow Zeta to turn on Palantir's services and or Palantir to turn on Zeta services. which kind of creates this flywheel and this incentive, because in theory, Palantir is able to create much better intelligence, much more informed intelligence, much more holistic intelligence for the enterprise if that one client turns on Zeta services, because that means they gain access, permissive access, to that unique proprietary data set Zeta has in context of that one enterprise, that unique enterprise. On the flip side of the coin, that same value proposition exists for Zeta, meaning that Zeta is able to generate much better intelligence for marketing and business purposes if and only if that client migrates over to Palantir services. Because then Zeta is able to, in full context, make better decisions, taking all that operational data and informing their data graph. So then they could go deploy ads, go to, make business decisions, they could do conquesting, et cetera, et cetera, et cetera. Hopefully I'm not confusing anybody here. I can't see the comment section, but I'm sure you can.
Yeah, no, they're no, everything's fine. Everything's fine on the comments. I was just also thinking, whenever I go to look into businesses, one of the things that I look at is management, founder-driven, strong culture, these sort of things. It's my understanding that Zeta is being founder-led by David Steinberg. But do you think that this is the visionary leader that might take this company to be a multi-bagger that you're looking at to be during the time that you want to hold it for?
I've talked to David a couple times now. I think I've interviewed him 3 or 4 times. Every time I talk to him, I realize more and more and more, this guy's a very, very technical person. He knows this company inside and out. He's not just one of these sort of business people that starts a company and delegates to every single technical individual. No, he fully comprehends this. In fact, he's actually written a couple white papers himself back in 2017, predicting that the marketing industry will be taken by storm by machine learning. And those companies who utilize machine learning to replace the individual, the human reasoning, for example, if a person right now were to deploy a Google campaign, a human would have to look at the results of the Google campaign, reason, make a decision, say, hey, was it successful? What were the numbers? What were the variables, et cetera, et cetera, et cetera? Am I targeting the right key demo? Upon that reasoning, you would then make a decision to deploy another campaign, adjust your creatives, et cetera, et cetera, et cetera. He predicted in 2017 that machine learning will replace that human. He has now built a company that is successfully doing that. And there's other companies who are doing that very successfully too. We all know of AppLovin. They're doing it in the sort of mobile gaming world and now consumer world, but that's a whole nother story. But yes, ultimately, do I believe that David Steinberg could be that technical leader to drive this to a multi-bagger? 100%, I believe so. Is he different than some of these founders that we see today? He's a little bit more experienced. He's a little bit more older than, let's say, like a Vlad or a Noto, for example, or a Zuckerberg, right?
Yeah,
but
Noto's older than you think, but yeah.
How old is Noto?
I think 58, 59.
Okay. Okay, so maybe they're in the same ballpark then, I would assume. Yeah. See, Noto, he screams a little more, youthfulness out of him.
It's good. It's good. Vlad and Zuck are young.
Yeah, and to be fair, they're absolutely unicorns too, right? It's hard to find CEOs that young doing something
very hard,
as successful as what they've accomplished.
Yeah. Creating, in Mark Zuckerberg's case, definitely very young for having a $1 trillion+ business, but that doesn't mean that there's not. I think that's one of the most beautiful things about investing is that it's not actually about picking the biggest companies in the world. It's about the rate of change. So can Zeta go from being a $2 billion company to being a $20 billion company? That's a 10x. In order for Meta to find a 10x here, you need it to, compete alongside larger than Apple and Nvidia put together. So Zeta, I think, is what now, a 6 billion, 5? What is the hope for this business in your investment strategy, and how long are you willing to hold this type of company? Like, how should people that look at this business? Is this a long-term hold? Is this going to take a while?
Yeah, so I think this year is a key year. It's an inflection year. They're exciting that they're actually guiding for GAAP profitability for the first time for the full year ever in their history. And then they're as per management's own words, they believe that it's going to be sustained GAAP profitable forever after that. So yes, this year is very important because it's going to be that first year where they become GAAP profitable. In fact, I think that they've sandbagged so hard that they're going to beat their own numbers likely by 50% on a GAAP basis comes the full year. So they're guiding to the top end. They gave a range between 2 cents to 4 cents EPS. I believe they're going to achieve about 6 cents and or higher at the bare minimum. So I think this year is a very important year for investors. Once we see the company sort of expand out towards the next 3-4 years, I believe 2029 will be a very difficult year because there is some natural cyclicality to the ad tech business. It depends how Zeta diversifies into this business intelligence vector, but at the moment, there's a little bit of this cyclical nature to the business because every 4 years, well, every 2 years you have a political cycle, but every 4 years you have the US general election. And 2029 is that very first year that you kind of have this lull where there's nothing really significant as of yet. Who knows? Zeta may make an acquisition and it may spice things up for 2029, but I've ran my own growth projections. And I believe that this year is a massive gangbusters year. Next year, you'll probably see about 25 to 26% year-over-year growth. The year after that, about 22 to 24. And then 29, I believe you're going to drop to about that 20% range. And then it just start to pick back up in 2030, about to that 24% range once again. But we'll have to wait and see. I think it's a very promising future. Again, this year is very important. It's all about execution. I think 2027 is a very important year as well, because that's when that Palantir partnerships becomes or is supposed to become extremely accretive, hitting at least $100 million a year in uplift. Keeping in mind, last 4-year forecast, they beat a full year early. I expect them to do that once again in 2027. So we're going to have to wait and see. But I think
that's
pretty
huge. I
bright
didn't know
future
that. I had no idea that that Zeta beat a 4-year guide 1 year early.
Yes.
That's wild. That said, though, it's interesting to me because as I was looking into this, it did feel very catalyst driven this year. RPO skyrocketing, whether that's because of Athena launching or something like this, that there's more products coming, more demand. The Palantir partnership, which you talked about being a catalyst for 2027, at least I didn't even know about that 2 months ago. So what are the new things that are going to come out that are potentially new catalysts that will lead the company even higher as they continue to pivot their strategy? So fast moving companies will continue to come up with new catalysts. But I see an inflection point in growth, an inflection point in their backlog. As you said, they're looking to go profitable. So an inflection on their margins. And the stock has been sort of range bound for a while now. What is the red flags, or what's the bear case that's keeping this stock lower?
So right now it really comes down to one, I think, lack of GAAP profitability or sustained GAAP profitability, because they were GAAP profitable in Q4 2025 and they dipped down into improfitability last quarter. So I think that sustained GAAP profitability for 4 quarters will be very important for Wall Street. On top of that, the sort of bear case scenarios, I think, revolve around data privacy. Very similar concept to your Metas, your Googles, and sort of this privacy environment changing over time. I think if there's a dramatic change in policy regarding what type of data you can keep and retain about a user or an individual, whether that be the United States or abroad, I think that could impact the business model. However, I do think there's a little bit of a balance, because I think the moment that you remove the ability for these apps, for example, like if we use AppLovin or Zeta as an example, if you remove the ability for app developers to monetize, the amount of app developers that are actually going to go out there with their neck on the line, secure funding, or spend a lot of time to develop an app will drop off a cliff. I think innovation will start to slow down, and I think that business development will start to lose its pace. So I think there has to be a happy medium through the eyes of a regulator to say, okay, at what point do we kind of block the retention of data and the collection of data? And when does that become detrimental to business development? I think there's a happy medium that the regulator has to kind of explore, and that the I guess your average individual has to kind of debate internally, okay, what do we want to tolerate? What is too invasive? What are we willing to accept? I think we're going into a world where, privacy is becoming, more and more solemn. Like, I don't think that we have privacy to the same extent that we once did, especially in an AI world where the amount of data that is being ingested and collected by each individual is like immense, especially with ChatGPT. There's never been a surface that is, and when I say surface, it just means like a platform or ecosystem that has as much context about you ever before. ChatGPT is retaining all that information specifically, uniquely applied to you. So in theory, ChatGPT could deploy a creative ad to you, remembering back, 3 months ago when you have a conversation and they found out that you really like the color purple, and that you are somebody who says, I like the color black for pants. And they could custom create you an ad that has all of those elements by placing, let's say, an Aritzia, pair of pants and sweater specifically for that individual with that unique context baked into its memory. There's never been a surface that has that much information. So I think the closest thing would have been a Meta or a Google, but even then they don't really have that same data retention down to that level where you actually have this engaged conversation. So I do think there's going to be a lot of debate over data privacy in the future. And how does that come full circle back to Zeta? Zeta's in that world. They're activating upon that data. All that data that's being ingested, they're providing context to it, they're building a profile. I think that's the bear case scenario, is a dramatic shift in the public's opinion on data and data privacy.
Someone in chat brought up the fact that there was a short report. I actually forgot about this.
Yep.
What was the short report about, and what was Zeta's answer?
So the short report was largely debunked. It pretty much said that Zeta was round-tripping revenues, essentially from some sort of data farm, they were saying, and that the data they were collecting was invalid. Therefore, any revenue they generated from that data, which they, in the short report, they claimed to be above 50%, would have been, essentially null and void, that they should, file some sort of report to revise their numbers. Zeta published some sort of, analytical paper after Deloitte did an audit of Zeta, and they found out that, okay, this data farm, or this quote unquote data farm, Deloitte never commented on that. Zeta says they refute the entire claim, saying, it's false, it's not real information. Nobody's really been able to address whether that was a data farm or not. It was acquired asset. So Zeta acquired a bunch of companies, and one of the domains within that company happened to be this site that essentially had a bunch of job listings. And on the job listings, it said, hey, or on the site, it said, hey, you get to sign up, and we're going to push, email job listings to you. And apparently that site never did that. So it took somebody's data and never actually gave them a job listing. And this was apparently from some sort of firsthand account, which fueled the short report. And then essentially fueled the claim that, Zeta's revenues are null and void. They're bunk, they're round tripping. But Deloitte said, okay, that specific data attributed to less than 1% of all revenues in 2024. So it kind of, killed that short report. From that short report, there was this lawsuit that occurred, which is still being litigated right now. It's actually going, I believe they have until July 27th. So it actually should be today. I should double check, but essentially the verdict of this case, or the direction of this case, comes down to whether they're going to discovery or if they're going to file for settlement. And Zeta and the plaintiff have to come to this sort of understanding, okay, which direction do we want to go with this? Do we agree that we're going to settle, or do we want to go to discovery? What this lawsuit was founded in was a statement made by, I believe it's the data lead or the lead data engineer, or something like that. His name is, I think, Nej Gore, or Gore Nej, one of the two. Sorry, if you're watching this, I apologize. But regardless, what he said was he corrected a speaker, I believe, in Zeta Live 2024. And Zeta Live is essentially this conference they hold every single year. And it highlights, AI marketing world. They have a bunch of guest speakers. They talk about the company. They talk about other companies and different opportunities. It's sort of like a Palantir event, right? Where everybody comes and they speak about different things. At that event, he corrected the speaker on stage and said, no, exactly. Zeta has, this is before they made their recent acquisition of Live Intent. Zeta had 110 opt-in email identities in their data graph. Based on that statement, they sued Zeta saying, hey, you misled investors because you said you had 240 million people in your opt-in data graph. They then responded and say, yes, we have 240 million people in our US data graph who are opt-in, but 110 were email opt-in. You can opt into different features of the data graph through, accepting cookies or, different sort of permission-based pages or whatever it may be. You don't necessarily have to opt into data collection by making an account and giving your email. That's just one factor of opting in. So now the judge said, okay, we can't throw this case out because you don't have an official definition of what quantifies opt-in. So now they're sort of in a debate of what opt-in means. So essentially the case is, okay, Zeta misled shareholders because they haven't defined what opt-in means. And it all derives from this one single quote at Zeta Live 2024. So there's the sort of like a mouthful of context and history for everybody who's watching.
Yeah. If there was any other metric or something that we didn't touch on, what do you think people would need to know before they pull the trigger on this company?
I honestly, Zeta is a little bit of a black box, right? It's hard to understand.
Sure.
You don't really have. I remember when I talked to you last about this, maybe last year, I think with Tevis, and yeah, we kind of talked about this, and it's hard to put your finger on Zeta. It's not like a Google. It's not like a ChatGPT. It's not something that you can actually use, right? So it's hard for the individual to understand it. If I were somebody looking into Zeta today, I really encourage you to take your time to understand what the company does and where they're going before you invest. Because I fundamentally believe if you invest in a company, you need to understand that company intrinsically. You need to know how it operates, what the risk profile is, so that when you look at a headline in the context of an article that's published, that may be a hit piece or a short report, that you can understand after reading that, does this impact my thesis? If you're unable to do that, if you're unable to explain how this company makes money, then I wouldn't touch it. And that goes really for any investment, frankly. And Zeta in particular, because technology is very difficult to understand, and especially as it pertains to data collection and identity graphs. It took me a lot to understand it. I've learned a lot, right? I have a tech background, so maybe it comes a little more naturally to me, but it's very difficult to understand this company. So please take your time, do a lot of research.
Yeah, no, I think that's a great way to round it out. Nick, where can people find you?
You can find me on X. My handle's on screen. You can also find me on Substack and or Blossom. Blossom, that's where I keep my portfolio, but Substack, I publish all kinds of free articles. So feel free to check those out. Free for everybody.
Gotcha, man. In the Blossom, what could we end up seeing? Is there other stocks other than just Zeta?
Yep. So my number one is Zeta. It's roughly 35, probably larger percentage today after today's run. It's about to close, but I don't know what it's at right now. Maybe you could tell me. But after that, it's Nebius. Nebius is number 2. Then it's Meta, AppLovin, Amazon, Google, SoFi, Pagaya, and Voyager. Those are all my.
Love your data. Holy, that was a data bomb.
Yep.
Yeah.
Meta, I'm big into MarTech and AdTech, right? I have that common theme.
Yeah, a ton. That's awesome, man. Thank you so much for joining me today. Really do appreciate it.
I appreciate it. Anytime, Tanner.
All right. I'll talk with you later, brother.
Yeah, we'll see you later. Thanks for having me. Bye.
No problem. Ladies and gentlemen, that was the Zeta King himself. What do you guys think about Zeta? I think, for me, similarly to what he said about the sort of black box commentary, it's hard to know the exact conversations that are going on with customers in the background. That's where I struggle. Like, the trade desk was doing beautifully until it wasn't. Until there was, new customers, until they ended up falling behind, and it was very hard to know that. I love it. I love it. Long Zeta. Yeah. CEO has an interesting past. I tried to talk about it a little bit, but obviously you know, it is also more important to, I don't know, talk about what they're doing now. Would you like to own it after adding more Palantir? I think I just want to add more Palantir, to be honest. Yeah. Okay. TTD, AppLovin, Zeta, why speculate when you can own Meta? Seth, I historically have done what you're saying exactly. So I like to own the endpoint, like the user at the end. But I think it's the cheapness of Zeta, the potential switch to profitability, how low that PE would be whenever they do go profitable. The company looks cheap versus their growth rate. And if in 2028, if they even beat, like imagine they beat this guidance, but that they have $2.5 billion worth of revenue, that's a very cheap company for those types of metrics going forward. 128% net dollar retention, whether that's like even organically 120%, those are huge numbers. Huge backlog. Yeah. People who say the CEO is shady, I would put my money on Meta should understand that. That's funny. Yeah, that's fair. That's fair. The market was going green almost the entire time that Nick was on. So, well, happy to have him back at any point, because we went from being extremely red to very green throughout the day. Now starting to see some red now that he's left. So this is bad. But Trump is actually speaking right now. Let's see if he's still live. Maybe we can tune into that a bit. I'd like to see that. Yes, he still is live. Let's have a listen to DJT. This will be what we round out the day with. So if anyone doesn't want to see this, you're fine to go. I'll see you guys tomorrow.
Here, and they went to foreign countries. They went to Germany. They went to Mexico and Canada. They went to Japan. They went to South Korea, car businesses, a lot of businesses. And now they're coming back home where they belong. And according to a report released just last week, the great big beautiful bill saved more than 170,000 Michigan jobs. You saw that. Think of that. If you took 170,000 people off of your tax-paying payrolls, think of how many people that is, filling a big stadium up 3 times. But remember, every single Democrat, it's a new word that I use, Democrat, I just exchanged the E for the, it works out quite nicely, thank you. But the Democrats, they want open borders, they want men playing in women's sports, they want transgender mutilation of your children. They want the transgender mutilation of your children for everyone, so I call them Democrats. And the Democrats don't want to have voter ID, and the Democrats...
I swear he only wants to talk about Iran whenever I'm not listening. He probably just switched the topic right now, and he's going to talk about it, and the market's going to go down. And then I'm going to unmute, and he's going to be talking about politics again.
Families, all of the things, no tax on tips, no tax on overtime, no tax on Social Security, all of these things they voted against. They just voted against. They voted against voter ID. They voted in favor of the transgender mutilation of your children, in favor of men playing in women's sports. I've looked at men playing in women's sports. It's very unfair. I had a one of the top NFL football players standing next to a wonderful female athlete, and they were playing a game of football, if you can believe this whole thing. This game did not work out very well. This was not a game that you will ever want to play again, I will tell you. The whole thing is crazy. There's something wrong. These people are crazy, and we can't let them get into office and ruin our country. We can't do it. And the congressional Democrats voting for tax hikes, they're voting.
All right, we're not going to get much, I don't think, more on Iran. I think there were some earlier clips that people were covering about how they said that very friendly talks are continuing to go on. So, yeah, if you guys are wanting to continue to listen to that Trump commentary, that will be live on the White House account. Amit should be starting about here at 3:45. So I'll let you guys jump over to Amit's chat. Let him know that Sleepy Time sent you. Thank you all so much for watching. Really do appreciate your time. Make sure you subscribe to the second channel, by the way. The second channel is popping off. We have new podcasts and everything dropping there almost every single day. So check that out. Until next time, thank you all so much for watching. Really do appreciate your time. Bye for now.